Hello everyone, welcome to the Ichimoku Charts.com daily analysis for the Euro US dollar FX for Monday, January the 16th, 2012. Well, a green body candle that closed the trading today in a very small green body, a candle that failed to change the trend to the downside, and the candle that we're analysing is the second last candle on the chart here. The last candle is still forming, that's the new 24-hour period that's forming, so we can't analyse that yet until the market closes tomorrow. But this last candle is a very small green body candle. The green body denotes the buyers making net bullish progress as opposed to the previous day where the sellers made net bearish progress in a very large amount. Even though yesterday was, or the previous day's trading was quite a bearish day, the market didn't change trend. The trend changed the day before that with a candle that made a higher high and a higher low, and the following day's trading made a higher high but a lower low. To change the trend to the downside, we would have required a lower high and a lower low, so technically no change of trend. And then for today's trading, we've had in bar chart terms an inside bar where the sellers weren't strong enough to take out the low to establish a new downtrend. The small body does raise some concern about continuation of the trend to the downside as well, and has set this market up for a potential retracement back up towards the Tenkan-sen, which is trading at 127.84, and that it looks like the market is actually going to change trend for tomorrow's trading. We can't preempt that yet because that trading hasn't closed, but we certainly do have a higher high and a higher low at the moment. In terms of Ichimoku, the market is bearish in all three time frames. So bearish in the long-term time frame by trading below the cloud, in the medium-term time frame by trading below the Kijun-sen, which is the pink line, and in the fast-term time frame by trading below the Tenkan-sen. Now, looking at those two indicators as well, they're pointing down fairly sharply, reflecting strong downside momentum in this market in both of those time frames. And across to the Chica span here, that's below the corresponding price action, confirming the bearishness that we're seeing in this market. Now, there is strong support for this market down at this 126.23 low, and the market tested roughly down to there for today's trading, and we've seen a small amount of price rejection, but certainly the bulls aren't terribly strong in this market at the moment. Very small green body, but the bears have lost commitment, so that may be important for a potential retracement back up towards the 127.84 region. Below that swing low at 26.23, we have support down at 25.86 from a previous level that was solid support. Failing that area, if the market does trade through that area with a bearish close down below there, the next support is down at 124.55, so a decent amount away, and that's fairly strong support as well. To the upside, we do have resistance at the Tenkan-sen, as we've said, but also extending up to around this 128.70 level where we saw price rejection when the market attempted to rally for the previous day's trading, and then up to around the 129.68 region where we could see some previous buying coming in and the market acting as support, so it will offer itself as resistance. Just above there we have the Kijun-sen trading at 130.02, so around that 130 level. That's quite a strong area of potential resistance for this market. We also have a couple of levels extending up above that 130 level as well. So bearishness in all three time frames. A market that attempted to trade lower, but we've found support. The sellers have lost commitment down around this area. 125.86 is a very important area for this market over the next few days. If we do see a breakout down below, we could quickly be trading down to 124.55. Next, moving on to the Aussie dollar US dollar FX, and the candle that we're analysing is the second last candle. The final candle is still forming, and we still have quite a fair bit of trading to go before we have the close of that candle. But it is looking like quite a bullish candle at the moment. But the candle that we're analysing here is a spinning top type candle, so quite some indecision in the market today. The trend is down. If we look at the previous day's trading, we had a candle which made a lower high and a lower low, changed the trend to the downside. Previously we had an uptrend in place in that first time frame, but that was on a spinning top type candle with a fairly large shadow on the bottom where we saw the sellers lose commitment. Today's trading once again a spinning top type candle, and the sellers weren't strong enough to take out the low of the previous candle, so that's quite important. Where we had upside price rejection down around these levels, around the 102.50 level roughly, and buying coming in, so the buyers are attempting to take control of this market, set this market up for a potential change of trend, and that's what looks like we're seeing at the moment with this green bodied candle. But we do have solid resistance overhead around the 103.77 level, and we can see that that level was tested on quite a few occasions, and roughly 1, 2, 3, 4, 5, and now this will be the 6th occasion if we do trade up to there. Having said that, if we do see a bullish close up above there, we could easily see this market trading above 104.40. We do have some resistance up around there, 104.47 roughly, and then the next area of resistance is up around 105, so a bullish close could see the market trade up to around 105. In terms of a pattern here, we have the boundaries marked with a pattern. We have a prior uptrend in place, a series of higher peaks and higher troughs here, and congestion has taken place over the previous couple of weeks, and it's a type of symmetrical triangle, ascending triangle, and does set the market up for a breakout up above there. So if we do see a breakout, then there is potential for the market to trade up above 105, but certainly 105 and the 104.40, 104.50 region may limit any move if there is a breakout up above. In terms of Ichimoku, the market is bullish in all three time frames, trading up above the cloud, above the Kijun-sen and the Tenkan-sen. Interestingly, the Kijun-sen is flat, and that's reflecting this congestion that we've seen in the market over the previous few weeks. The market attempted to retrace back towards there on a couple of occasions, and while that's pointing flat, there still is a possibility that the market will retrace back towards there. If we see a breakout down below the boundary of this congestion area, then we could see the market trading down towards the Kijun-sen, which is trading at 101.23, and we could see the market find support down around that level. Certainly do have support down at the cloud, very thin amount of cloud though, so if the market does sell off in a serious way and we have some downside momentum, some strong downside momentum, then we could see the market break out and test down to much lower levels around below the $1 level. To the upside, we noted the 105, the 106 area of resistance, and then we have strong resistance extending up to 107.63. Looking across at the Chikou span here, that's above the corresponding price action, so that's confirming the bullishness that we're seeing in all of these three time frames. So this market is attempting to build some momentum to the upside for a breakout, but quite some resistance overhead.